Hey everybody, welcome back to FSP Forex-Stock-Predictions. Hope you're all having a great day. I am the Vortex Trader, and today we are going to be doing something a little bit different. We are going to be discussing a scalping strategy for the DAX, where to enter, where to put our take profits, where to put our stop losses. The entire strategy will be revealed in today's video. So without further ado, let's jump right into it. All right, guys, so let me explain how I go about using this strategy. This is a breakout strategy, meaning we are trading the breakout from a previous zone of support and resistance, right? That's number one. Number two, it involves trading around the London market open as well as the New York market open. Okay, that's number two. Number three, the only indicator that we will be using for this strategy is a simple moving average, okay, with the length or the input being 9, right? The 9 is just a representation of the average price for the most 9 recent candles. That's all that a moving average does. So you can see how the moving average, it is this little blue line. It follows the candles quite closely. All right. So these vertical lines, if you guys can see this on your screens, this represents the London market open and then the New York market open. And I have that across the entire chart. All right, you can find those indicators in TradingView. This helps me to see exactly when I am going to be trading, because this breakout strategy involves trading around those time zones. Okay, so whichever time zone you currently live in, make sure you are awake an hour before London opens. And if you are sleeping during that, then an hour before New York, right? It does not use the Asian time frame, right? However, it does use the Asian time frame to set up our range that we will be impulsively breaking through. All right, enough chit chat. Let's jump right into this strategy. So how does it work? Now, ideally, during the Asian trading session, we want to see price form some sort of support or resistance zone. Okay? We need a minimum of 2 to 3 taps to help confirm to us that it is indeed a support or resistance zone. Now, support lines and resistance lines are rarely perfect, right? So what I like to do is, instead of putting a resistance line there, for example, I would rather have the price overshoot the resistance and support lines than undershoot. Because with this, we can see that we have other taps below the extremities of this wick, right? So I would rather bring it down. I would rather bring the resistance line down and let price overshoot the resistance line by a few pips if it needs to, because this will give me more multiple taps, which will help confirm an entry for me. All right, now we can see that during this is the London trading session. However, we have a nice one just below it with the Asian trading session. So let's start here. There are a ton of examples on this chart. I am going to be showing you around 10 or so, 8 to 10 examples. Right. So we bring our resistance line down. We can see that the market has overshot by a little bit. This is okay, because generally what happens is these candles will come back inside of this range. Now, this is during the Asian market. We can see we have 1 tap, 2 taps, 3 taps, 4 taps. Now, the second the London market opens, we have a nice impulsive candle shooting up above and breaking above this Asian trading session resistance line. Okay, now this is where we will take our entries, because once we see an impulsive move happen either at the London Open or when the New York Open happens, this will set the rest of the market movement for the rest of the day, right? This sets up the momentum. Now, we are clearly going long. If you are unsure of which direction to be trading in, when in doubt, zoom out. Always pick a higher time frame. This current strategy exists on the 15-minute chart. So if you are unsure of the way that you should be trading, click on the 1 hour or the 4 hour charts. Look to see what price is doing. At the moment, we can clearly see we are making higher highs and higher lows. Therefore, we are looking for long setups. Right, so we see our impulsive candle break out of the Asian range that was set before it. And what we want to see, and guys, this is very important because this helps us spot our entries. We want to see the bottom of the impulsive breakout candle sits above the moving average. Now we can see that happen right here, right? The bottom of, I'm going to say it again, the bottom of the impulsive candle sits above the moving average, on top of it. In other words, the impulsive candle goes through the moving average, okay? And this rule works as long as at the very most we have the bottom third of the impulsive candle with the moving average moving through it. Now I'll show you what I mean in some other examples, but let's get to it for this first trade. So what we do, we see the impulsive break, we then wait for the candle to close. Once the candle closes, and we can clearly see it's closed above the Asian range, right? We then put our long position tool there, and we can enter with a market order, or we can enter with a couple of pips above a stop order, right? Depending how you like to trade. We will then place our stop loss a couple of pips below the bottom of the impulsive candle. I like to use at least 10 pips, right? This gives me room, and it gives room for the market to breathe. There we go. And I always like to target a minimum of 1 to 2 risk to reward. And we can see that we definitely got that with that position. Right, so this impulsive candle, the breakout candle, this is what we are looking at. So let's put a little square around it, just like so. And we're going to color it in green. So now we know that this trade was a winning trade. Now this is a great way to backtest, guys. Rewind time on TradingView, go through these setups yourselves, right? Spot these impulsive breakout candles and trade them. If you can find them, if it matches your list of rules and criteria, then use it. Okay, use these colors, use these little blocks and everything, all these tools and resources that TradingView gives us. It's fantastic. It's like journaling live. Right. What happened there? That's another thing that TradingView likes to do. Charts just jump. All right. There we go. Let's see. The next one, we had price come up during the London session, form a new line of resistance. 1 tap, 2 taps, 3 taps, 4 taps, a wick, and we had a nice impulsive breakout on the 5th tap. So you see that zones of support and resistance do not only have to be formed during the Asian trading range. Ideally, we would like to see that. So we could class that as a grade A setup, the one below, right? If we see a nice range form during the Asian range, yes? Okay, so now here is our impulsive candle. We can clearly see we broke above this previous zone of resistance quite nicely there, and we can see the very bottom third of the impulsive candle sits nicely above the moving average. Right, and what would we do? We would take our long position tool, we would enter a market order right there, we would place our stop loss a couple of pips, about 10 pips or so below the bottom of the impulsive candle, and we would target a 1 to 2 risk to reward, which we can see we clearly got. We overshot that. If you guys want to test the strategy out so you can get more than 1 to 2, that is all very well and good, whatever works for you. For me, trading on the 15-minute, I like to get a 1 to 2 risk to reward at the very least. All right, let's move along. What happened then? We see price carrying on. We then saw this massive bears, this large bearish candle appear, and the market flipped from bullish to bearish. Let's carry on and see if we can find some more examples. I've jotted down quite a few here for you guys. Right, so here is the next one, and here is an example of a trade that did not work, right? Let me show you why. We can see that here is our Asian range, right? Forming a new line of resistance. We then had our impulsive candle, and we can clearly see that price, although broke above this line of resistance, it did not trend high enough for us to get to a 1-to-2 risk to reward. If you were scalping for a 1-to-1, you may have gotten that. However, this is clearly a loser, and we cannot lie to ourselves, right? We always have to notate and show on the charts where we have gone wrong, where trades have not worked out. And one other reason that I can think of for this trade not working is that look at the massive drop. It's like a drop of a cliff. Price became suddenly very bearish, right? It reversed from being a bullish trend to a bearish trend. It's suddenly making lower lows and lower highs, and we tried to go against the trend with this breakout, and it did not work in our favor. So remember, guys, always try and trade with the trend. Great. Let's carry on. Here is an awesome example. Let's see. This happened during the Asian trading range. Let's remove that arrow. That just shows that price is pushing up. So it is a support line or a support zone. 1 tap, 2 tap, 3 tap, 4 tap. And what do we see? We see our impulsive candle. The top of the candle just sitting above that moving average. We would have entered at the close of this impulsive candle, targeting a 1-to-2 risk to reward, and we can see price came up, and we have given ourselves room with a 10 pip stop loss, so this would have not stopped us out. It is a simple retest of this support line. That's all it is. And then we saw price move away and clearly take us towards our target. Right, let's carry on and see if we can spot some more. Let's see what we got. Here is price clearly making a new support line. Let's see. Right, this, you guys can spot this, right? This is definitely an impulsive candle breakout. However, look at the top of the candle. It didn't quite touch the moving average, right? Therefore, because it never touched the moving average, right, there is no entry. So I simply remove this. There is no entry, and we carry on and look for another entry. Here is one. Right, let's see. This happened during the London trading session. We can clearly see a zone, a line of resistance. 1 tap, 2 taps, 3 taps. Look at this impulsive candle that broke up above. And this happened an hour or so after the New York session started, right? And we have this awesome candle. The bottom third of the candle sits nicely above the moving average. The impulsiveness of this candle closes very close to its high, right? We can see that. We would have entered as a market order or a stop order as this candle closed, right? Stop loss 10 pips below the bottom of the impulsive candle, targeting a 1-to-2 risk to reward. And we can see as we progress, our target would have been taken out quite nicely. Great, let's carry on. Let's see if there are more. Here we are. Right, this range happened during the Asian trading session. And guys, you can always spot the Asian trading session by the size of the candles. Look how small they are, right? There is not a lot of volume. If we had our volume switched on at the bottom, you would see that volume is very low during the Asian trading session, right? Very, very, very low. Here is our breakout, which happened 30 minutes after the London market opened up. And we can see that we would have opened up with a short position right there. Let's put that short position tool there. We would have put our stop loss 10 pips or so above the high of the impulsive candle, which is around here. And we want a 1-to-2 risk to reward. Let's see if we got it. This is over 1 to 2, and we clearly got it. So you can see how price respects these breakout zones, right? Especially if they occur after the Asian trading session, right? Because London sets up the momentum for the rest of the day. Now, these entries do not happen every single day, guys. At the very most, you'll get maybe 1 to 2 entries per day. Maybe. At the very least, you'll get maybe 1 to 2 entries per week, because a lot of the days you're going to see a lot of choppy action, right? Even after Asia's trading range, you're going to get a lot of choppy action. When London opens, you may not get a breakout, right? And this would be a different type of trading. This would be buying at support and selling at resistance. Now, this is a different trading strategy altogether, and I do not recommend mixing the two, right? If you are only trading this one, then at least with one account or a demo account, or just on one account, just trade this one. Just stick to these rules and trade this one, because the goal is to become consistently profitable, and you cannot do that if you keep trading a whole bunch of strategies on the same chart, right? Stick to one strategy and see how that works out for you. Right, here we have another one. We can see that we created a new range during the New York session. We have a line of resistance, 1 tap, 2 tap, 3 taps, and then there is our impulsive candle. Now, one thing to say about these impulsive candles, guys, right? Please make sure that the candles themselves are mostly solid. And if you are going long, please make sure that the candle closes very close to its high. What do I mean by that? I mean the candle comes up and creates a wick. Yes? And then comes down and closes. The close of the candle should be very close to the very top of the wick. All right, that's how you know it's an impulsive candle. Besides for the fact that it takes out a previous zone of resistance, like right here. The candle to the left of it does the same thing. Look at it. It sits nicely above the moving average. However, more than the top half of the candle is just a wick. It's a gigantic wick. So that does not classify as a breakout candle. We want the candle to be mostly solid, and then we want to see the bottom of the candle sit on top of the moving average. Right, let's carry on and see if we can spot one or two more before we wrap up this video. Let's have a look-see. All right, here we go. Clearly an Asian range, right? Look at the size of the candles. Clearly a resistance zone. 1 tap, came all the way down. There's a gap there. Markets always tend to fill up the gaps, which it did. Came back up, wicked. Another tap, came back up, touched it. Another tap, got rejected. And what do we have? We have 15 minutes after the London Open, we have a nice impulsive candle. How do we tell? We can see that it sits on top of the moving average nicely. It closed very close to its high, and it took out this previous line of resistance, which was formed during the Asian range. And we can see we could have entered with a market order at the impulsive candle close, targeting a risk to reward of 1 to 2, and we would have surely hit target right there. Here is another example of a impulsive candle that did not work, because we can see we would have been stopped out. In theory, we were correct, but the institution said, nope, not today, and we came up, and this clearly got stop hunted, right? Even with a wide 10 pip stop loss, we can see that this blue wick over here would have stopped us out. However, the strategy was still correct, so it doesn't matter. If you are following the rules, it doesn't matter if you get stopped out, right? Just move on to the next one. Okay, here we go. Let's carry on. Let's zoom out a little bit. Sorry, I'm just making this really big so you guys can see it on your screens. Let's see. Where are we today? 26 is moving. There we go. All right. We can see this happened during the Asian range, right? Look at the size of the candles compared to the other candles, right? This is a support line. Support 1, 2, 3, 4 taps. Remember what I said at the beginning of the video. We would rather have price overshoot the support and resistance lines than undershoot. Right. So we have 1, 2, 3 because it gives us more taps. and it generally comes back within the zone. All right, then look how perfect this is. As the London market opens, we see this beautiful impulsive candle, which set the momentum up for the rest of the day. We can see the top bit of the candle sits perfectly above the moving average. It is a solid candle. It closed very close to its low, and it clearly took out the Asian range, which is this zone right here, right? Clearly closed below it. So what would we have done? Let's shrink that down a bit. We would have entered a short position, and we would have entered into the market as a market order or a stop order a couple of pips below the close of the impulsive candle. The stop loss is 10 pips or so above the bottom or the top of the impulsive candle, the beginning of the impulsive candle. And we would want a 1 to 2 risk to reward, which we could have gotten. Yes, if we held on, we could have made a 1 to 3. All right, this all depends with this how you decipher what you want to do, like how you decide what your targets are going to be, right? Backtesting. That's all it is. It all comes down to backtesting. Okay, we can remove that for now. And right now we are, I think this is caught up to current time. Let's see. Yes, this is current time. Now we can see that today, for example, we are in a range, right? Price has not broken out. We have seen no impulses breaking out from this range right here. We are still within it, right? Price came down, formed a new low, came back up, resistance, 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 support, support, resistance, 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 support, support. Remember, rather have price overshoot than undershoot, just fine. Shot all the way to resistance, came down to resistance, came back down to support. There are no breakouts happening currently. So today there would be no trade, right? We always have to make sure that we see an impulsive candle break out of a previous support or resistance zone. That is when we can start looking for our entry. Once we see that impulsive candle, we make sure that that impulsive candle sits above the moving average. All right, and that's how we get our entry, guys. So if this is something, right, especially for you newbies that haven't been trading for long, if this is something that could help you, then please, what I suggest is create an account on TradingView yourself. Go through time. Go back in time and backtest this strategy until you get very comfortable trading it, right? I have not traded it myself on any other time frame, and I have not traded it on any other pair. Currently, it is working on the DAX 40 in the 15-minute time frame. I probably will test it in other markets, right? I'll test it on other time frames as well, and then I'll surely post about that too. But for the moment, I see it working purely for me on the DAX 40 in the 15-minute, and there's nothing wrong with that, right? If you have a certain pair that you like to trade, perhaps you just like to trade Bitcoin and you just like to scalp Bitcoin on a very small time frame, and you are uncertain if something like this would work, put on that moving average, jump into the 15-minute, go through the different time zones, see where the momentum hits, right? If you're an equity trader, if you're a currency trader, it doesn't matter, right? Go through the time zones, go through the charts and see what works for you. Right, guys? So on that note, if you found this information helpful, please would you go ahead and hit that like button, hit that subscribe button, leave us a comment in the comment section. Let me know if this is something that you think will help you along your journey to becoming consistently profitable. And share this video, guys, with friends or people that you know that are starting their trading journeys, because we all need to share the knowledge, right? We are all in the same boat. We are all retail day traders, and we all want to become profitable. That's the goal, right? So how do we learn? We learn from our fellow traders in the industry, right? Thanks for watching, guys. I will be seeing you all in the next one. See you later.